Hey guys, how's it going? I'm coming on real quick for this one-on-one private mentoring session with Karen. So I'm just gonna set up this room real quick and then I'm gonna send her the link. I'm not gonna be answering any questions to the public today, but you guys are more than welcome to sit in and listen to Karen's questions because she probably has the same questions you guys have. So everything all set up here and we should be good to go. All right, cool. Let me get this link sent out to her real quick and we will get started. All right, cool. Looks like she's making her way in right now. So let's get a few moments for her to join up and then it will be started shortly. All right. Let's give a few more moments for Karen to join in. She's still trying to join right now.
Benzinga's options alert service has the potential to discover double.
Let's go and mute that. All right, cool. Just respond to other questions we have over here.
Hi,
Hey,
Sean.
Karen. Hey, how's it going? Can you hear me?
Yep, perfect. How are you?
Doing great. How are you?
I'm hanging in, hanging in, hanging in.
That's good. How was your holiday weekend?
Well, here it was a 4-day weekend, so it was pretty good.
Nice. Yeah, I noticed a lot of people had Monday off, so that's great.
Yeah, we had Monday and Tuesday.
Oh, that's cool. Yeah, you got an extra, even longer. Are you still going? You still have work now until like New Year's, or are you just
So
going?
we have, yeah, we do. We have Wednesday, Thursday, and most places actually do half day on Friday.
Nice, that's
And then
awesome.
we get Monday off and it's back to the grind.
Oh, I know. New year, new everything, right?
Exactly.
Yeah, exactly.
Yeah.
All right, cool. So for today's session, I forgot if you had like specific questions. I don't think you sent me anything, right?
No, so my biggest thing was I had mentioned to you was the psychology about it. Trying to minimize the FOMO, the greed, the overtrading, managing emotions, and there are about 3 strategies I just wanted to go over quickly. I'm pretty much okay with them, but I just wanted to just run through it maybe once.
Yeah.
But it's mainly just settling down and not jumping into trade. I have this thing where, okay, when you do this analysis, I'm like, all right, I see if you say you're looking for a sell and chances are it's going to go down, then I jump in without waiting for the correct entry. And then of course, if I lose, then I start the whole over trading thing, and then it's a hot mess.
Yeah, no, that's a common issue with a lot of people. That's why I always try to warn everybody before the entry comes to, wait for the candle to close. And typically people want to get in early so they get a head start, but you don't really know when it's going to actually close, because sometimes it'll look like it's closing and in the last 5 seconds it disappears and then you're stuck in the position.
Exactly.
Yeah,
exactly.
definitely.
So kind of what I wanted us to go over. I don't know if you have any good tips or, yeah.
I think for the most part, well, what's been helping me a lot is like during the live sessions, I put the requirements on the screen. So like you see where I put like, say, for example, we're looking for the momentum scalp. Like what I like to do now, what I've been doing lately is I just check them off one by one. And I think by checking them off, that helps you really wait for it to actually happen. Versus, kind of going in for a head start. Cause like typically I'll like mark up where I'll put an arrow there, depending on what step that I'm on, or you can just use a line as well. You can just cross them off when it's lined up and then, cross everything off so that you're not really skipping through any steps. Cause sometimes I've seen some people too, where they're skipping like the momentum on the 10 and 5 because they think that it's already there. And lo and behold, they look and they're like, oh, there's a buy signal there. So there was actually no entry. And it's happened to me too sometimes. So I think for the most part, one of the best things that you can probably do is to have an actual checklist on your screen or in front of you. A lot of people in the group, they have like Post-its or like little papers in front of them. So that they can always remind themselves, these are the requirements that need to be met. If that's not your problem and your problem is just entry, then I would recommend to wait for the candle to actually close. And if you get in for a late entry, it's better than getting in early and then go into some massive drawdown, right? Because sometimes you enter and the signal will disappear. And then as soon as you enter it, the price goes complete opposite, right? And then you're in stress and you're just wondering what to do next. And it's really hard to determine because you're not sure if that's going to come back down. So you want to pull out early. And you also don't want to hold on to it for too long because then they'll go into some deeper drawdown if it continues to retreat. Yes, I think the main thing you should do is just wait for the actual candle to close because that seems like that's the thing. I think you're fine with the strategy, going over the requirements. It's really just waiting for the actual candle to close. Yeah. You have the timer on your trading view, right? Like right here on the side.
Yes.
Okay. Yeah. So typically when I'm looking for the entry, I'm like just watching that go down to 0, and then that's where I make my entry. I know sometimes it's a little more difficult because the price is very volatile. So it'll show that it's, a very good entry. And then the last 5-10 seconds, the candle just goes complete opposite. So like typically what I'll do is I'll just wait for that to close there. And then what I usually do is I have my finger already set on the buy and sell button or on the trader. So like as soon as it does close and I see that it's actually closed, I'll just hit buy or sell. And then if I need to exit early, I'll either move my TP a little closer, or I'll just have my finger now on the X button so that if it does hit TP on trading view and I say I entered kind of late, right? Like maybe a few pips late and it hits TP on trading view, then I just click the X on MT4. So there's, I'm gonna have less profits. I won't have the full TP, but at least I'll have profit that I was meant to get.
Right.
Exactly. And it's just repetition, the problem with like FOMO and just revenge trading is that once you start to FOMO and you start to revenge trade, then you go into that bad habit versus having the good habit of actually waiting for it. So I think probably the main things it's not something that I can really teach you. You kind of have to like practice. And I think the thing that you also have to remember is just there's going to be another trade, right? Because I know sometimes people get the FOMO because they don't want to miss that trade. But then immediately after, sometimes there's like another trade right after.
Right.
Yeah.
That's factor. But I am going to try doing the checklist as well. I think that would actually help to control my FOMO a lot better as well.
Yeah, because it kind of slows you down, because if you're just in the trade without actually looking at the steps here, you're just entering right away and then you don't really think about it. But if you're waiting for the candle to close, like say you have 20 seconds left, you're like, okay, I want to make sure everything is still here. So you look at the first requirement, everything's met. Second requirement, by the time you're done looking at all the steps, the candle's going to close and you're ready for entry. So you don't enter late. You don't enter.
Yeah. Okay. So I'll definitely try that. Definitely.
Yeah. And then if you miss the trade, just skip it. I know sometimes like people want to like even if you miss the trade, I've seen people sometimes it's crazy. It hits TP already, but then they still enter once it's past TP, and
Yep.
then the retracement
Yeah.
happens. Yeah,
Yeah.
so yeah, that's where the FOMO comes in, right? Because you're like, oh, I missed the entire trade, and you feel like you could still go in because you think the price is going to continue moving. But
Exactly.
typically when it spikes down or spikes up,
It goes
in a
right back up.
exactly, it goes right into retracement. So it's better to just skip it than to enter it late.
Exactly. All right. So I'll
Yeah.
try that. I think that was one of the biggest things. Was that, and then the whole greed thing. But I think if I follow this, then I should be okay, because that just covers everything really.
Yeah, exactly. And if you're applying the same strategies that I'm applying, then typically they're going to line up. Like if you're doing the momentum scalp and momentum scalp variation, it's pretty much the same requirements. The only difference is one of them requires momentum and then the other one just requires retracement. So it's
Right.
basically the same thing. You're just looking. And typically what happens with those two entries is you'll have the momentum scalp variation, and it's usually followed by an actual momentum scalp. So if you do miss the variation, it's okay because you're going to have another opportunity with the following scalp.
Okay. And then speaking of which, can you go through the high-low momentum pivot scalp strategy?
Oh yeah, no, definitely. Yeah, that strategy is actually the same exact strategy as the momentum scalp. The only difference is that you're looking for structure for price to reject off. So, so if you're applying the momentum scalp, there's just gonna be one more step. So I'll show you the difference, and it's actually very simple. So let me just clean up the chart a little bit here, and I'll see if I can find one that that came up recently. So I think there was one right here, I believe. See how big this candle was. Yeah, this one's fine. So there's actually two here that came up, or three actually. There's like a lot that came up right here. I'll go over them each one so that you can see the examples here. So here are the requirements for the momentum scalp, and then here are the requirements for the momentum or the high-low momentum pivot scalp. So it's pretty much the same thing. First, you want to confirm the overall trend. It's just the requirements are a bit off. They're on different steps. So for the high-low momentum pivot scalp, the reason why I put it this way is because you want to confirm the actual entry, and then the trend will be like confirmation at the end. Versus with a momentum scalp, this is the first thing we're looking for because that's just the step by step that we're doing. But realistically, they're the same thing. So the step 4 here for the momentum high-low momentum pivot scalp is going to be the same as step 1 here.
Overall trend.
Yeah, confirm trading the direction of overall trend, and then confirm trading the overall direction of trend and momentum. So basically, this 4th step right here is going to be the same as first step here. So you just want to make sure everything is bearish. So for example, here you're looking for the overall trend on the 1 minute, 5 minute, and 10 minute. It was all bearish for this entire morning, so we don't have to go back and check. We already knew it was bearish. So once you've confirmed that, you'll move on to, or we'll go from step by step. But that's the main thing here, because it's pretty much the same thing. The only difference here is that you're identifying structure. So let me go and just delete this so there's no confusion. So first, you want to identify a momentum signal. The reason why you're identifying that is because you want to trade in the direction of momentum. So right here, we have a sell signal. It doesn't matter whether it's valid or invalid. It just needs to be a sell signal so that you can identify that momentum is going in that direction. Once you've identified that, going on to step 2, this is the main difference. So now you're just drawing a zone at the high low before momentum. So if you have a sell signal right here, you want to identify the high because you want to see price pushing away from that high so that you have momentum continuing in the direction that you're looking to trade. So if you have a sell signal, you're looking for a high. If you have a buy signal, you're looking for a low. Right here, you have the high. So you draw that high right there. And then next, you just want to confirm that momentum is rejecting off the high low. This isn't really a requirement that you need, because if you have momentum that's bouncing off of the high low or off the zone, it's like an automatic assumption that price is pushing away, right? So you don't necessarily need to. This is just a requirement there so that there's some confirmation. But realistically, if you have a sell signal and it's pushing away from the zone, that's all you're looking for. So requirements 1 through 3 met right here. Requirement 4, we already confirmed that. We've identified the overall trend, which is bearish. And then after that, you can enter on the next candle. So you have that set up right there. Short position right here. Your TP is 100 pips. You let the trade run from that point. And there you go. Price ends up going down right there.
Okay, so it operates similar to the SR rejection strategy.
Yeah,
SR
yeah,
zone.
yeah,
Okay, we just do the high low on this one.
yeah. So for the other one, you're using the SR zones. So
Right.
it's very similar. It's just that you're using different structure. So basically,
Right.
it's like, basically all the strategies that we apply, they're all based off momentum. So we're looking for a push away from a certain point. For this here, you're looking for a rejection of structure. The difference with this and the SR is because the SR sometimes doesn't appear until a lot later, right?
Right. Okay.
So this is like a head start. You're getting a head start to the SR. So like typically what will happen here is even if you miss, or say you identify this and you miss it, if price does come back to that area that you drew up, you're probably going to have a second entry there.
Okay.
So like some people use that, like Matt uses this a lot. If he misses a trade and he sees the retracement come back, typically there'll be an SR zone, maybe an hour later. And that's his entry from that point.
Okay.
Yeah. So there's one right there, and there's another one like right before it. There's actually like 3 or 4 like this one right here as well. Same thing. Sell momentum zone right here at the high low. You can see the momentum is pushing away from it. Everything's bearish. Another entry right there. Same exact thing. Let the trade run and full TP. So you can see how this zone right here acts as a resistance, right? So price pushes down and rejects off it. It's kind of like a break and retest pattern.
Right.
Yeah, so price breaks past the structure, comes back to the retest, but then it blasts right through it.
Okay. And then you can use the pivot scalp as a confluence.
Exactly. Yeah. Yeah.
Okay.
You can use that as a confluence as well if price is, pushing away from it.
Right.
A lot of these strategies are they're pretty much the same thing. It's just different points of entry. Just for this is a more strict version of a momentum scalp, because a momentum scalp, you're not looking for structure. So say, for example, you do see a momentum scalp, because realistically, this is a momentum scalp entry. But if you do see the structure here, this is going to give you a better confirmation. Like, okay, price is actually pushing away from this zone. So you have more confluences. You have a better idea that, okay, price, if it does come up, it's probably going to bounce off this area and continue lower.
Okay.
Yeah.
Okay.
There's another one right here too. I mean, there's a lot they just happen a lot here at the end. Sometimes they happen often, sometimes they don't. I mean, lately they haven't been happening because the market's been so back and forth, but today it was actually very directional. So there's a lot of it. There's another one right here too. There's like, I think 4 or 5 entries right here, same exact strategy. Yeah, I don't trade this late into the session, but for the people who do, sometimes you have a lot more opportunity. Yeah. So is there any other confusion with the strategy? I can help you with it more further, or if you're good, we can move on.
No, I'm actually pretty good. It's pretty clear now.
Okay. Cool.
And other one, I think I missed a couple of days last week when you started this new breakout.
Oh yeah.
Yeah. Could you go through that one, please?
Yeah, sure. So I changed the breakout a little bit, just slightly, because what happened with a lot of people is they always mess up with the confirmation, which is understandable because it's hard. Sometimes, we're looking for a strong candle, but what I perceive as a strong candle might not be strong to someone else, or someone else might think a candle's strong and I might not think of it. So it kind of messes up everyone's agreement that this is an actual breakout. So what I did is I just made a small change to it. I used like the same analysis that we use here for the momentum scalp, where I'm using 3 timeframes to identify the trend. This is just like a 2.0 of it. So the cool thing about this breakout 2.0 is that you don't have to wait for any confirmation. As soon as the market opens, you can take it for entry. This is the actual breakout 2.0. We haven't had any of these entries for the past 2 days. There's 2 ways of applying it. There's this way where you want to use the trend, which I recommend because you want to have a higher quality trade since this is a bigger move. You're going for like, about 1,000 to 1,500 pips. So you want to make sure that you're actually taking quality entry. You're not just taking every single entry that comes up. So I'll show you the one that we're supposed to be applying. The one from today and yesterday, those weren't the normal breakout 2.0. Those are like a riskier version because when I first put together the strategy, I was just taking every momentum. on open so that I can get a baseline. I can see, okay, this is how the strategy works. And then from there, I was like, okay, what can I add more to make this a higher probability trade? And that's why I added the trend to it.
Okay.
So I prefer to do it with the trend. So I'll show you it with the trend. Once we have an actual entry, then I'll stop doing the shortcut version of it. It's just a lot of people are like curious because I posted the results and everybody wants to apply it, of course. You know,
Of course.
everyone's excited. Yeah, everyone gets
The
excited.
winning rate.
Yeah, exactly. So let's see. We'll go over here to Friday because Friday was the last day that there was an actual entry. So
Okay.
go over here real quick. Market open here at 6:30. Go here on the 30-minute as well. Friday, December 23 at 6:30. And then one over here on the 1 hour, Friday, December 23. Okay, so I have the 1 hour set over here. I have the 30-minute set over here. And I have the 10-minute set over here. I'm going to go and put the requirements right here. So the thing about this too that's also cool is that you'll have time before the the market opens to actually confirm the entry. So you're not rushing like on the 1 minute. Sometimes, you know, if you're not able to confirm everything and then the 1 minute candle opens, you have to make a decision right away or you're going to miss the entry. So
Exactly.
yeah, and it's more stressful for people. I feel like not everyone gets it. So I think this one's going to be a lot better. And for my testing, I think it's been pretty good. So first, you want to confirm the trend on the 10-minute, 30-minute, and 1 hour. Looking over here on the 10-minute, you can see that price is bearish. It's below the pivots. Pivots are angling down. Trend meter is also red. So we confirm bearish trend here on the 10-minute. Going over here to the 30-minute, you want to look for the same thing. This is one confusion that I wanted to clear up with a lot of people because majority of people like to take the easy route and they just want to look at the trend meter down here. So they see that it's blue and they don't realize that it's still bearish. The reason why this is bearish here is because if you were to identify where price is with regard to the pivots, price was already bearish right here. Price came up for retracement and then now it's coming right back below to continue in its bearish trend. So for this here, even though the trend mirror is blue, realistically, this is a bearish trend. And if you drew your own trend line there, you could also see that it was bearish, right? So for this here, you're not going to base it off the trend meter. You're going to use the trend meter and the pivots. The pivots are preferred to use because they're more active versus the trend meter, which is a little bit laggy. Sometimes you'll see price is going up here, but it's still red. But you know that this might be shifting if price continues to push up higher. And for example, again, right here, this turns green, but this really isn't bullish yet because price didn't really confirm. It's just coming up for retracement and then it's coming back down. So right here on the 30, you can see that this is bearish. Price is below the pivots, trend mirror is blue, but it's just continuing to where it was going prior. And then lastly here on the 1 hour, same exact thing, right? Price kind of pushed down a little bit, it retraced up, it became neutral, but then now it's coming back down for a bearish confirmation. So it's coming down. So you just want to confirm the trend on basically all the time frames. Bearish, bearish, bearish. Once you have that, you can move on to the next step. So I'll just maximize this 10-minute here, because we already confirmed the first step, which is really all that's needed for those 3 time frames. For this, and then for the second step, you just want to confirm the direction of momentum. So you want to look back and see where's the most recent momentum signal. Right here, obviously, we have a sell.
Right.
This is going to confirm that, okay, price is probably going to continue dropping lower, right? So once you confirm that, it's bearish, you have a sell signal. As soon as this candle here closes, so this is a 620 candle, 630 is when the market actually opens. So once you have that there, you enter a short position right here. And then you'll either have a TP stop loss of 150 or 1,500 or 1,000. So right here, you can see how the range is kind of wide, right? There's a lot of space in between where the candle is currently versus where it was, say an hour ago, an hour before that. So when you have a big range like this, you want to have the full move because in case price retraces up,
you're gonna have this push on.
Yeah. In case it pushes up, because sometimes on open there's some manipulation where price will push up at least maybe like 500 pips to maybe even 1,000 pips, and then it corrects right back down, right?
Right.
So right here, this is a wide range, so we're just going to use the full 1,500 pips. Once you have this set up right here, that's basically it. As soon as the market opens, you hit sell and your TP stop loss is set. And then as price moves along, that's the breakout. So you don't have to do any thinking. You just enter the trade and then just let it go for, however long it takes. Typically it'll happen really quick because, usually on open, you're going to have at least like 1,000 pip move to 1,500 pip move.
Okay.
Yeah. Yeah. So this is an example for Friday. I think there is another one that happened on Thursday as well, the day before, which was, let's see, right over here. And it's the same thing, same requirements. I think it was bearish on that day too. So Thursday, yeah, it was actually more clear here on Thursday because it was already down below. Yeah, so right here on the 1 hour, you can see it's bearish. 30-minute is also bearish. 10-minute here is also bearish. So once you confirm the overall trend, again, you look for the most recent momentum. Right here, it's 1,000 pips. You have a sell momentum. And then if we set the stop loss or TP stop loss here, let me see how far is it. So you wouldn't want to do 1,000 pips because you can see how close it is. It's a little too close. So you basically want to do the 1,500 again, just to have that cushion. And then once the candle opens here at 620, you just let the trade run, and you can see there the breakout again.
Okay.
Yeah.
Okay.
So it's pretty simple. I mean, it's kind of confusing at first until you actually see it live. But once you see it live, you have time in between to really set it up, so you don't have to worry about it too much.
Okay.
Yeah. Do you want to see another example, or are you okay with this one?
No, I'm pretty good with that one. It's pretty straightforward. Catching the strategies are, once I go over it a few times, I'm okay with it. Like I said, it's just the whole preempting what's going to happen next and jumping in before I should.
Yeah, exactly. It's really like timing, timing for, and it's a common thing. It's not just you, like everybody has that issue. Even myself sometimes I'll wait and I'll try to enter at the last 5 seconds, and it gets to the last second and then the signal disappears and I'm stuck in the position.
Yeah. Yep. Yeah. That's exactly it.
Yeah. The good thing with this here is that you don't have to worry about that, because as soon as the candle closes, you just make entry and you just leave it alone.
Okay. Okay.
Okay. So let's see. Was there another strategy, or was that it for these?
No, that was it. The other strategies I'm pretty good with.
Okay, cool. Yeah. I think for you, it's just going to be, a matter of repetition and practice.
Yeah.
I think the more and more that you get confident with the strategies and applying it, the less FOMO you'll get. And I think, like I mentioned, you just have to let the trade actually come to you rather than you trying to force a trade. Because I know lately there hasn't been that many trades because obviously we're during the holiday season, but it's fine because, when it comes down to the full market again next week, once we're into the new year, it'll be a lot easier because the market will be volatile again and there's going to be more than one entry.
Right. Okay.
Yeah.
Sounds good.
Cool.
Yeah, that was it for me, really.
Cool.
Yeah.
Cool. Yeah. Hopefully this helps, because I know sometimes with people, it's they just need someone to really explain to them, or have a walkthrough. But once you have a walkthrough, it reinforces your knowledge and you feel more comfortable with doing things on your own.
Exactly. I think that's really what it is. And you feel like you're now accountable to yourself and also to listen. This group it's been a very, very supportive group.
Yeah, no, definitely. I'm glad, because there's a lot of people who join our group from other groups, and they just tell me how toxic it is in other groups. And people ask for help. It's like they shun them for asking for help, and it's crazy. It's like everyone's trying to help each other. Everyone's on the same path, but I feel like in other groups it's like a competition between everybody.
Yeah, I remember when I started doing the Forex trading, I went in the very famous other group, and that's the same thing I felt. And then what I also found with them is that you always had to buy into this. And I'm like, this doesn't make sense. If you're supposed to be learning something, I don't see how you have to keep buying all these different apps. And it was just a hot mess. And then I was with them. When you're new to this whole thing, you join a whole bunch of different groups, and one day I was like, I can't do this, and I cleared everything out, and somehow I ended up with K2 Trades, and I've been there since. So I'm pretty happy. So
Yeah, no, definitely. I'm glad you found us. I still I don't know where everybody comes from, because sometimes people will randomly join. Some people get referred. Some people just randomly find me on YouTube. So
yeah,
it's good. And I'm glad that our community stays, on track with trading. We're not
exactly.
really messing around too much in the chat like it used to be before. It's more like,
Focus.
more
Yeah.
focus. Yeah, more focus. So
Yeah.
everyone can do good. Hopefully this year will be good for everybody. I think for a majority of people, it's been great. So
Yeah.
hopefully this year will be even better the next following year.
Yep.
All right, cool. So unless you have any other questions, I guess we can wrap this up. But if you ever need help or you want to have another session like this, always feel free to reach out. I'm here to help you out and everyone. I just want to see everyone do well, because it just it's like proof of concept, right? Like when I see people do well with my strategies, it just shows that it actually works.
Exactly.
And it helps me be more confident in my own strategies as well.
Exactly.
Yeah,
Exactly.
definitely. All right, Karen. So I guess we'll wrap this up for now.
Yep. And thank you so much for your time. And thanks again for rescheduling. Much appreciated.
Oh yeah, no, sorry about last week. I totally forgot. I was like, when you messaged me, I was like, oh man, I totally forgot that it was Thursday last week.
And it's funny because when I messaged you, I'm like, hold on, which Thursday did we discuss? Because in the same conversation, it was something about next week. And I'm like, I'm not even sure if we confirmed. So it's not a problem. It all worked out well.
Yeah, it worked out for us. So it's good.
Perfect.
All right,
Thanks again.
Yeah, definitely.
See you in the morning.
See you tomorrow. All right, have a great day.
Bye.